Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's Pre-Market Prep. Spencer Israel joined by Joel Elconin and Dennis Dick. On today's show, pretty much going to talk about the follow-through from yesterday's tech wreck. That'll be the theme of the day. We have some individual news, obviously, in Twitter. They got Citron. We have some news on Tesla, news on Facebook. So news throughout the sector, but the tech wreck will kind of lead today's show. We will do a little bit of discussion about long-term investing today. We'll spend about 5 minutes talking about some stocks or some markets that we're interested in buying long-term. We will do that at some point during the show. Our guest today will be Sean Udall. He is the CIO of Quantum Trading Strategies. He will join us at 8:35. Joel, what's doing this morning in the S&Ps?
We got a nice range in the S&Ps here. We got a 24.5-point range overnight. Your pre-market low is 2,600 even. We will talk about that when Dennis comes on. Pre-market high here is 2,450. We're near the highs of the session. Not a lot in there. 30.25 is your daily pivot, so I'll be looking at for a lower risk shorting opportunity. Looking at the crude market, boy, that got right up near the high of the move. Missed it, I believe, by 10, 15 cents. And then we sold off higher, down 41 cents at 64.84. Let's emphasize that 66.5 level if, in fact, we do get back there again. Gold, I mean, it's trying to clear 1350, but it just can't. And it is down $7 here, 1340.80. Silver down 11 cents at 16.43. So let's bring in Dennis here. And boy, a couple days.
What, no Bitcoin price?
No, you said you didn't want to hear about Bitcoin.
What's up with you? What's up with you? No Bitcoin. Just because it goes under 8,000 doesn't mean it doesn't exist anymore, Joel.
Okay,
come on.
right.
We like the Bitcoin price.
Bitcoin flat at 8,000. Right on the kisser.
Oh, like you called it. Look at this. I don't even look at that market, and I called where it is.
Yeah, I mean,
I haven't looked for 24 hours. I'm right on the money. Maybe that means I'm going to be hot today. I called the price before even looking at it.
It's up 1.09% at 8,069, and it's just no one talk about it anymore. Hats off to Jim Angel. If you're listening, he didn't think it would come crashing down. He just thought it would kind of just wither away and
go out with a whimper, I think is what he said. He's been exactly right. He said that when we had the show when Bitcoin was at 18,000, he says eventually this is just going to go out with a whimper, and it has slowly just leaked, and you don't hear nearly as much about it anymore. So Jim Angel called this absolutely correctly on our show, and if you're listening to him, well, you'd have saved yourself $10,000 on Bitcoin because it was 18,000 when he made that call. So Jim Angel, you can follow him on Twitter. What is his follow on Twitter? We should give him some props. Angel is.
I think you had Jim Angel.
I don't think it is. It's like golf prof. Golf? Yeah, it's a GUFIN prof. So because he's from Georgian, GUFIN prof. Jim Angel with the call on the Bitcoin.
Yeah, and it's funny. Right around when we did that show at the end of the year, and the futures came out. That was the top, just a little bit, a few days before. You can see it on the chart, 20,000. I don't know, getting a little interesting here. I see a series of lows at like 7,800. So if you're interested in trading the range, the last three lows in the Bitcoin futures is the SIBO contract. Wow, it's between 77.40 and 78.60. So big level, big support level in Bitcoin, but I'm not buying it. Spoos continue to rally here, Dennis. We're up 8 points, a big range overnight. What are they buying? What are they selling out there?
Well, you know what? They're buying some, and this is what we saw yesterday. Before we had the carnage of yesterday afternoon where they started selling everything, we started seeing a theme develop in the morning, and that was selling the tech stocks because the NASDAQ was down most of the day, and buying value defensive names. If you look actually yesterday, a number of issues closed in the green despite the ugly day. Procter & Gamble had a nice candle going, gave back some of the gains like everything did, because in the last hour they started selling everything. But Coca-Cola, some of your food stocks were starting to catch a bid. Your utilities were very strong yesterday. So that is what we typically see. We've kind of went, away from this where, some of the defensive names were not working at all, even when in the down market. But that's not what we were seeing yesterday. We were seeing a lot of defensive names. So your higher yielding stock, your food stocks, utility stocks actually catching a bid. So those stocks are interesting here now. We're going to segue eventually into, long-term investment portfolio talk. But, a lot of these stocks are just simply too cheap now. I mean, some of these food stocks have been absolutely annihilated. You got GIS that priced their secondary offering way down at $44 last night. It's not even coming close to there. It's $45.05. I mean, here's a stock that was $60 in January. Food stock's now $45 with a 4.35% dividend. The stock's just getting too cheap. And that's why you're starting to see value investors starting to come in here. I'm interested in a stock like this as well. So that's, was a theme that was developing yesterday. I think that theme could continue today. I think tech, even though you're seeing a little rally in it, a relief rally from yesterday, I think it's going to get sold. I mean, Tesla obviously was one of your market leaders yesterday. It really bounced or it really got hit hard on obviously all their bad news. It's getting hit hard again here this morning because you got Moody's with a credit downgrade on it. So Tesla's down another $6 despite some of the other techs trading up. Spencer, do you got some more details on that Moody's report? Because this came out after the bell, and Tesla has not recovered at all after Moody's downgraded it.
Well, there's more than one headline on Tesla. There's a few. So first there was cautious comments from Citi ahead of the company's Q1 update. Then there was word that the NTSB is investigating a fatal Tesla SUV crash. Plus, there's the overall weakness. Then you got Moody's downgrading the company's credit rating. Let me pull it up right here on my screen to B3, 6 levels below investment grade, downgraded from B2 to B3. What do they cite? Same thing that everyone always cites with Tesla: production expectation concerns. And if they don't make those production expectations, they may soon have to raise $2 billion, which, that's a lot of money. So if they don't meet them, that's what it comes out. That's always been the story. Same story.
I mean, Tesla's had to do capital raises before, and with this debt coming due and with the production levels not being where they were, it's a good report to read because it's saying they're probably going to maybe do another equity raise. That's going to be more dilution for shareholders, which is never good for your stock price. So maybe investors anticipating that a little bit here while we're down another $6 here this morning off of that Moody's report. But this has now broken some technical levels. And we talked yesterday that, hey, 291 is the level in the sand. Everybody was saying 300, but it was 291. Regardless of whether it was 291 or 300, you can say now it is officially through that support level. And that means when stocks break through their support and, the next day it's going to follow through here again. Now another $6 on negative Moody's report. It's got to find a new support. And I'll be honest, I don't see much till 250.
This is a breakdown here in Tesla.
It is.
Broke down yesterday as part of the tech wreck carnage. We got an after hours low at 271.11. We are a couple bucks off that. Just be aware, after you hit that 271.11, you got a big old bounce off that back to almost 279. But once again, we are tapering off. Dennis mentioned that major support level. Let's just call it 290, 300. You have to give big ranges in stocks with big prices. Let's go. Should we go weekly here? Man,
go out to the weeklies.
Look, that's scary.
I don't see anything telling you had a triple bottom, and we're going out to the weeklies in the week of March 3rd, 10th, and 17th. So we're looking basically in March. You had a triple bottom right near the 243 area, 242, 243, 242.78. That's, really where the next major support comes in for me. You could round it up and say 250, but really what's in there before that? There's nothing in there.
Yeah, and actually it's even below. I mean, you did have the monthly low at 50.24. But those other couple lows are right at the 42, 43 area. In fact, 3 monthly lows between 42.01 and 43 even. So that's something definitely have to keep an eye on here. Now, this is a weekly chart, so you can keep an eye on the weekly lows. One's at 59.75. Interestingly, we're filling a gap that you had. If you're patient and you're waiting for gaps, you had a gap up in 2017. So there's a big breakdown here in Tesla. Not good news. Tech wreck. I mean, just kind of fit all the different categories. But we are in the red. So, keep an eye on that closing price. And that's a ways away from here, down 544. So things aren't looking good for Tesla. We might have to hunt Gene up and see Mr. Munster, see how he's doing. You know what also you had with this? You had the incident in Arizona, right? Where the driverless car.
Well, that was Uber.
Yeah, but that's the direction Tesla's going in, right? I mean, as far as aren't they like the supposed to be
eventually.
The leader?
Yeah.
I mean, that was one of the catalysts that started this whole thing. So
yeah, that's true.
That was one of the catalysts that kickstarted the selling a few days ago when this incident happened. So I just think now it's like you're saying, it's just a technical complete breakdown here now on fundamental news, and the Moody's downgrade's not helping the cause. So you got people that are going to jump in. We know the BTFDers lurk everywhere, and you could get bounces. And obviously, I'm just saying if you're jumping in here, you are just throwing darts at the board because there's no level that's to lean on here. John Dodson agrees. I mean, the 243.16 is a level. I just don't see much else in there. So, they don't necessarily have to go directly to those levels, but a lot of times stocks will go to the next support level over the course of, the next few days of trading. And the next support level that I see, I agree with John Dodson, is around 243.
Yeah. Chanos has been right on this one. Stargazer, he's just making a comment. He loves the bets that you and I have, makes the show exciting. I think we need to cancel out that last steak dinner. I mean, that move over 2,700 was
no, you're not getting out of your
go under 26.
You're gonna win a lunch back here though, like maybe today with Square. So you're getting good shape at Square. 49.50 versus 59.50. I came within a hair of winning that one too. So you're gonna get a lunch back here. I think Square is gonna breach $50 here today. And I'll say it here this morning. You're seeing whatever techs are rallying here this morning. I think there's again the same issue I said a couple days ago, that it was a gift. This is what I said on Monday morning when we were rallying hard on everything. I said it was a gift. It became more of a gift because we rallied even more Monday afternoon. But it was a gift. It was a gift rally and a terrible tape from Thursday and Friday. And now the gift is gone. It went away in one day. So I think this morning is a smaller gift. I think if you're in the tech stocks, I think the path of least resistance is down. I think the tech stocks are going red today. So we see the QQQ trading up 0.4%. I think we're going to be red by 10 o'clock. So my positioning is I'm selling tech into this rally. Just as short-term trades, not long-term investments, talking short-term right now. But I think we're going red here today on the Qs. Do you want to take a bet on that one, Joel?
No. But you know what I wanted? You know what one you really got lucky on was on Micron. I really wanted to get
lucky because I actually am losing money on Micron.
I know. And
I'm glad I bought 1/3 of my position. I was saying I want to buy, more of my position at 50. I think I'm going to get that shot.
You're going to get more.
So I was saying yesterday, I don't know if I'm going to get that shot. Now I'm saying I'm likely getting that shot. I hope I pull the trigger. You know what? Because I do like Micron. I do think there's, good value tech here. It's a stock that, is making money. Obviously, if there's issues, with NVIDIA, Micron, and Tesla, it's all kind of related to a certain extent with the chips. But I think Micron, I think it's the best value play out of all of those.
What are you going to do at 40?
I'm a value guy. We know that.
What are you going to do at 40?
A Micron?
Yeah.
Maybe I'll buy the last of my position. Never frown, average down. I'll take your quote.
Okay. Stargazers.
I normally don't average down, but I intentionally only put 1/3 of my money in at 60 ahead of the report because I wanted to participate if it went up, but I didn't want to get killed if it went down. So I'm actually happy it's coming down here because I only have 1/3 of my investment position out there. I'm going to buy another third at 50, and I'll buy the last third at 40.
Okay.
That's how I'm doing it.
Just sympathy plays, and I really don't know these stocks here, so Dennis can help me out a chat.
First of all,
what'd you say?
What are you going sympathy on? You're jumping all over. I don't even know what stock you're talking. Sympathy with what?
Tesla.
Well, there's nothing.
Well, Stargazer brought up a couple stocks.
NVIDIA.
Okay, NVIDIA.
NVIDIA is, and we're stretching it a bit, but right now NVIDIA and Tesla are moving together. So you're seeing it, that NVIDIA popped $3 here today. I'm fading that rally in NVIDIA all day long. It hit 220 yesterday. I think it retested 220 here today. So I think there's 8 points on the bone here for day traders. And you might have to take some heat, but I think you're going to get a shot here at 220 again here today on NVIDIA. So I'm fading the NVIDIA rally as well because Tesla's down.
Well, Stargazer mentioned two stocks that I don't know anything about. ALB, what is that one? Albemarle?
No, these are lithium plays.
Okay.
So yeah. So, you're talking about electric cars, lithium. ALB and FMC are the two biggest lithium plays. I have those actually on my long-term looking list, but they're still expensive. But, they're interesting now because ALB and FMC have both come significantly off where they were at the end of the year. I mean, ALB got up to $143, now $93. They start to get more interesting here now. I think you even got a little dividend there in ALB, 1.43%. FMC, 0.88%. The dividend is less. But these are lithium plays. So if you think we're all going electric here, lithium eventually is going to come in. And these are plays. ALB is talking about, doing a spinoff for a pure play of lithium because they have some other businesses there as well. It's interesting.
Okay. All right. I mean,
we know some fundamental stuff here. We're not all technicals.
You did.
I even know they're planning potential spinoff. That's what the CEO was talking a couple days ago on ALB, a spinoff of their whole lithium business. So I believe that was the headline, anyways. I read so many headlines to get them all mixed up, but I think it was ALB.
Okay. All right. So we are jumping all over the place here.
All over the place. Okay.
Spooza continuing the rally. New high of the session. Up 9 sticks at 24.75.
Let's move away from Tesla. Let's move on to, we're going to talk Twitter later with Sean. Because we got Sean Udall coming on. He was, tweeting a storm out there when Andrew left was, obviously came out with his tweet and he was on CNBC. And, and Sean wanted to say his piece about this. So we're going to save all of the Twitter talk for Sean at 8:35. So if you want to talk Andrew left, Citron and Twitter, 8:35. We'll talk with Sean Udall when he comes on from Phoenix. But let's move on to, we have about 4 or 5 major earnings stocks here to talk about. Let's run through those. Then we're going to do a little segment on investment portfolio investing right now in this, environment where we're actually getting beat up. There is some stocks out there that I think are long-term grabs. But let's move on. Let's start with Lululemon. It is your big winner here of the day. It is trading up 8 or 7 points here now in the pre-market. Nice lift for Lulu. Is this all-time high for Lulu?
I
think it is.
Wow. Yeah, it is. Can you believe it? The
yoga pants are hot again.
See-through yoga pants. You never go away. Wow.
That's not it.
On Lululemon.
Q4 adjusted EPS $1.33 versus $1.27, so a 6-cent beat there. Sales $928 million versus $911 million, so a beat there. Comps up 12%. Q1 EPS guidance coming in higher by 4 to 6 cents. Sales guidance coming in higher by let's call it $30 million. Fiscal year guidance was also good.
It's a nice lift. If the market starts to roll over, they'll hit this, though, because we've seen this happen already. I mean, Adobe is a tech stock. It had a great report yesterday, and it got slaughtered. So it opened at the high, and they hit it. Or was it Adobe? Red Hat. It was Red Hat that had the good report. And Red Hat opened right up near the highs, and they hit it. So you got to be careful. Not a tech stock, so that's one thing going for it. That's the only thing going for it, so it may not get hit as hard. But if the market starts to roll over and we start to go red, they will take profits in everything, and they will quickly take profits in Lululemon too. That is why I am not buying it up here at all-time highs. Normally when stocks hit all-time highs and good earnings, you get follow through, but it is just not the tape to do that in. Not the tape to chase stocks at all. They seem to give you a second chance. If I could tell you anything about trading in weak markets, it's don't chase the rips. You sell the rips. You don't buy the rips. This is a rip in Lululemon. I don't know if I'm necessarily selling it because there's better things to sell out there. Like I've been preaching the tech stocks all morning. But I think, Lululemon here, up 8%, I'd be scared to come in here and buy it. And I wouldn't be surprised if it fades a bit. I don't think it's giving it all back, though.
There's no way you could buy this. I mean, you got to ring the register here if you got this thing trading up 584.
And this tape, if the market starts to roll over, I'm getting the hell out of Lululemon. The hell out if I'm in it. And I'm not going to be in
86.40. That's a double top in the pre-market trade. Actually, it was after hours when that came out. That eclipses the former all-time high of 83.98. I think that's even going to come into play today, even though we're trading above it right now. Just half and whole numbers. I mean, if I had a big position or a big option position, what's the bid offer right now, Dennis? What
84.60 to 84.95.
Yeah, there's I don't know, like 85. You think this might if it trades over 85? I mean, boom, I would get out there at the half and whole numbers. That's what big institutions are going to be doing in this one. But as I mentioned, pre-market high 86.40. I just don't think we're going to see that today.
Just before we're going to go to the next earnings stock here, Terry Kern saying, could we get a possible capitulation bottom here today in some of the tech? So I just want to clarify here because I've been pretty bearish to tech. So these are day trades I'm talking about here on the tech stocks right now. I'm talking I would fade this rally as a day trader because I wear two hats. And I actually wear three hats. I wear a day trading hat, I wear a swing trading hat, and I wear a long-term investing hat. Long-term investing hat, some of these techs are actually interesting. Short-term day trading hat says sell the hell out of this rally this morning, in my opinion. And that's why when I'm saying the Qs are going to go red today, these are day trades. So I think, like I was saying, I think NVIDIA could retest yesterday's low, a 120. So if I'm a day trader, 228 to 220, that's 8 points on a $200 stock. It's almost 3%. I mean, that's a pretty good trade. So that's, the setups that I'm looking for here today. So I just want to clarify when I'm saying, today I'd be selling tech, that is today's trade. That is not a long-term trade. And Terry's making a good point. If these techs really start to get wrecked again, and we all live in just scenario analysis as traders, but they start to get hammered here again after the open and the sellers come in, you could see some capitulation. The worst thing that could happen for today, and I think Kramer has said that before, is we just kind of, rally back a little bit there because then there's too much meat on the bone. We need to shake out the short-term traders who have been, buying these things up. And they haven't been shaken yet. There's still the BTFDers who still have belief here. We need to get them out. But when I see stocks like Apple trading, already in the red here today, Tesla trading in the red, we're already losing some of our leaders in the pre-market here. And that's telling me, our leaders here, when our leaders start to fade, keep an eye on Facebook because obviously it's going to be your major leader there. If it starts to fade too, you're going to lose the other ones as well. But just to clarify, these are day trades I'm talking about when I'm talking about selling tech here today.
All right. And, how I give different significance to different levels here. I mean, I was dreaming about this 2,600 level yesterday. Just look at that. 3 lows in the same.
Joel's dreaming about levels here.
I was dreaming it was going to go through it and I didn't get to hit it. And we were down like 60 handles.
You're going to get your shot.
No, I don't know.
Are you hitting it if we go through 2,600?
I don't. I tell you, I'm being cautious here. Hopefully I'll be.
Are you getting bullish?
As long as these 3 lows hold here, yeah, I am.
You got some levels to lean on.
Yeah.
I see where you're looking. 257.83 equivalent in the spot.
Yeah, exactly.
So you're saying as long as we hold 257.83, we're okay. Exactly. If we take that out, then we're testing the low of February.
Exactly.
And that was, that little, mini flash crash low where everything gets slaughtered there. We were down 1,000. That's 252.92. I tend to think we might test that. I think we are going to test the 257 level you're talking about. Let's see what it does there. But that would be a nice little trade too. We're 261 right now. So if we get down 257, there's 40 handles on the short side before you even at that level. So we got some work to do still for, the shorts to have a case. So let's see what happens. Today's a big day.
This really is. This is Stargazers mentioned the 2,000 day moving average. Maybe he means the 200. But yeah, I mean, that's support. I mean, I don't know how,
the 2,000 day moving average would be interesting.
Be a little bit lower.
Add that indicator.
I do everything basis the spoos. Friday's low was 25.86. Monday's low was 25.91. And then Tuesday's low was just above that at 25.96. So, I will keep it. If we go red, then I definitely think we're going to take out those. But if they can keep this market from going red, then, your average daily range is, 40, 45 points. We could just drift back up to the 26.40, 26.50.
But after yesterday, don't you feel there is a lot of nervous money managers out there? I mean, here and media chases price like to a ridiculous level. And, and a lot of people that come on CNBC, some of these analysts, even some of the, some of the regulars that are on there, they chase price too. I mean, after Monday's rally, everybody was coming out and saying the low is in, you got to be buying. How bad of advice was that from all these analysts that came on CNBC saying the low is in? And here you are next day getting slaughtered to the tune of 500 points. I mean, we were the ones that were fading that rally. And we don't get everything right on this show. Obviously, we're far from that. But we made the call on Monday morning when I think we were one of the only shows that were saying I'd sell the hell out of this rally. And we were early because we were only up 400 and we ended up going up 600. But now, we're well in the money with that call. And obviously, that's what traders are. There's always somebody's bullish, somebody's bearish, or you wouldn't have trading. But there was a lot of people on CNBC who were bullish Monday, and last night everybody's bearish. So, contrarian indicator, and CNBC just gets a lot of people on there, but it's like herd mentality. They see everything selling yesterday. I'm saying now everybody who was buying Monday or Tuesday morning, this is where they really got hit because everybody came in Monday. They're like, I missed it. And we were up again Tuesday morning, and they slammed all those people who bought those highs on Tuesday morning. And now those people are sitting significantly underwater. They're hoping for a rally to try to cut some of their losses. And I think you're going to see sellers into this rally this morning. I think you're going to see the same thing. And that's why I'm saying I think it's a nice setup for day traders here to sell into the strength this morning.
And Spinner's reminding us tomorrow's the end of the quarter, right? So you're going to have some March window dressing. Markets closed on Friday. So there's a lot of different factors going on.
And let me tell you something about window dressing here. Window dressing can happen, a lot easier when markets are stable, when there's not much going on. That if you have institutional money managers that can buy some stocks at the end of the quarter to make them look better and then sell them the next day. There is so much volatility and so much nervousness in this market right now. The window dressing is going to be muted. That's what I'm saying. I think it's going to be muted to a certain extent. I don't think you got people coming in and saying this stock was so hot this quarter that I want to come in here and buy to make sure I have that on my portfolio. Even more people nervous this time around. So it's a different little animal here, the window dressing for this quarter, because you have a lot of people that are sitting there probably fairly nervous about their portfolio. Not so much the fear of missing out, but the fear of losing. And fear of losing is a completely different story. So I'm not trying to get eternally bearish here on you. This is just saying that
caution.
The Bears have a case here right now. The Bears got a case.
And they got a much better case if we take out that triple bottom from Friday, Monday, and Tuesday. I believe we have GDP coming up here at 8:30. Do we have that coming up? We still got a couple minutes here before that.
We never got into the segment on investing. Do you want to do that at after Sean at 8:50, Spencer?
We can do that. Yeah, let's do that.
Okay, because we got a couple more earnings stocks. We got imbalances. We got GDP. We got a lot of stuff happening before Sean here in the next segment. So the segment on investing, long-term investing, is going to be at 8:50 now. We just bumped it.
We can't get to everything.
Well, it's because I go on my long tangents and I don't shut up.
Let's do RH real fast. RH.
Do it.
All right. RH yesterday reporting Q4 adjusted EPS $1.69 versus $1.55. Sales $669 million versus $672 million. So mixed Q4 numbers. Q1 guidance coming in. Or the adjusted EPS, and there was no estimate on that, or the sales, actually. There were no estimates, but the numbers came in 95 cents to $1.05 was the EPS, about $560 million for the sales, which is lower than the estimate by about $30 million. Fiscal year EPS guidance coming in line, fiscal year sales guidance coming in line.
I'm torn on this one. $85, it's a nice breakout through the 80. You had major resistance forming the entire month of March at 80. We are through that. Let's see if we can hold above there. If you can hold above 80, then, obviously this is, still good to go. But I think you're going to get a retest of 80. So I'd almost say I'd like to try to buy a pullback here in the pre-market or in, the regular session if it pulls back to 80. If you could just subscribe to the old resistance becomes new support. But I'm so scared on the overall market that I don't want to buy anything.
You had a big dip. Oh, you're so quick. How'd you know that? I
see your lips moving, but nothing coming out of them.
You had a big dip to 64.10 and then a major rip up to 87 even. Now you're hanging out here just under $85. Really, really a consistent seller, 86.50, 86.60. So I think that's going to be a resistance. The high could be in. Look out under 83.50 too. Since we made that high, that is the low. You can see here on the 15-minute chart. And get in the dailies here. You need to go to 78.60 to fill the gap. I don't know if we'll see that, but just look like sellers here congregating in the 86 handle. Spoos continue to defy you, Dennis.
We're up a whole point since I started talking about this.
We got GDP.
A whole 1 point.
We got GDP 2.9.
You're taking 1 point of heat.
2.9% versus 2.7 is a GDP that just came out. So
it does kind of feel like they're just propping them up, and they can keep it up to the open, and then they just pop all those buy.
That's what I'm saying.
I'm feeling it too.
I'll say it again, and here we're already starting to roll over, so maybe we're not going to be able to prop them up till the open. But 90% of your institutional money managers, I would even say 95% of your institutional money managers aren't trading the pre-market. Why? The liquidity is not there for them to work their big positions. So when the big money comes in after the open at 9:30, that's when you see the real moves. And that's why I think right now you got a lot of retail traders propping it up. You got a lot of smaller players, maybe, excited to come in here and buy the dip from yesterday. But those players, I think, are going to get squashed after 9:30. This is a bold call. I make calls a lot of times on the show, but I'm really making calls here. Now you're actually up 3 handles with my call, because we were trading at 260, 165 when I'm embarrassed. We got up to 75. Now we're starting to roll over a little bit more. So keep an eye on this market. I think there's the people who are buying here in the pre-market are going to get squashed.
All right. Always looking at the pre-market high as a parameter here. That would good. If the longer it takes to take that out, then more goes to Dennis's theory of a big down day. We went past imbalance
big down,
time.
But, and I want to clarify, I'm trying to call the whole path of trading here today. I think we get squashed shortly after the open. I think by 10 o'clock we're red. Let's see how hard we get hit. If we get really hard, really fast, that's the best news for the market, because then you could get that, like Terry Kern is saying, like a little short-term capitulation bottom. Worst case scenario is we just leak all day. So, and then best case scenario is obviously I'm wrong and we just rally the hell out of it today. I think you could see a relief rally in the afternoon if we really get squashed quickly in the morning. But, morning trade, I'm bearish here for the morning.
Okay. Walgreens Boots Alliance, they had earnings too, right?
Yes, it did.
I believe so. Yep. The WBA, they reported Q2 just EPS $1.73 versus $1.55. Sales $33 billion versus $32.2 billion. They also raised their fiscal year EPS guidance by 40 cents.
Joel, this has overhead supply all over the place.
It does.
Let's go back to Nike. Was it Nike that reported last week and was trading way up in the pre-market?
Yeah.
Wasn't it?
Yep.
Or was that last week? Am I losing it?
Yes, Thursday.
That was like Thursday or Friday.
But it was way up. And it never even came close to there. And it gave it all back. I mean, that was a great report. I think it was Nike. It was a really good report. This is an okay report here too, but the overall tape here, just not going to help Walgreens. I see yesterday's high, $68 is a major resistance point. I see if you get above there, there's all kinds of resistance in 69 to 71. I mean, it's just so much overhead supply here. I can't see this thing just taking off and going up $5 today. I just don't see it.
Let's just take a look at it. Your pre-market trading, you've already leaked $2. You got up to $69.50. About 12,000 shares traded on that bracket, and then you fell back all the way to 67. So you need to hold 67 here short term. Let's go to the dailies here, and man, oh man, this thing, what high here to keep an eye on, it's still relevant to me, is 68.11, because we are still trading below 68.11. That was your March 16th high. So keep an eye on the 68, and that. If it ever goes into super rally mode here, boy, you got a ton of sellers from 70.5 to 71, several highs in that area. Let's see how CVS is doing today. Whew, that's not a good looking chart there either.
It's up 40 cents in sympathy here. Ugly chart. I mean, these drug, retailers have had a tough time of it, a tough go of it. And, Walgreens has looked better than that one, but I don't want any part of these things right now. Maybe you could say on the long-term investing hat, maybe CVS is starting to get, interesting here, but short-term, the trend is not your friend.
All right.
It's not your friend at Walgreens either.
You want to bring Sean in here on the fly?
Sure. Sean Udall, CIO of Quantum Trading Strategies. Udall Tech Strat is.
I just want to say NVIDIA's flat here now. I gave it to you at 228 this morning. It's 225.5. Gave it all back.
Probably Spinner and John Dodson and those sneaky guys out there hitting it. Maybe Stargazer helped them out a little bit too.
Sean, are you with us?
I am testing.
Hey, we got you. How's it going?
Good. How are you guys?
Good. You are live, Sean. You are live.
Well, good morning, Benzinga.
There we go. There we go. So how you doing, Mr. Udall? I know you've wanted these FANG stocks to come in for quite some time here. Dennis is trying to scare everybody here in the chat. He's really super bearish. Most bearish he's been.
I'm super bearish this morning, though, Sean. Day trading hat here. I think this rally fades. That's day trading hat.
Yeah, I mean, I can't remember if you guys or if I was on right when we were at the recent highs. My note to subscribers recently was, be prepared for another 700-point NASDAQ drop. And we've gotten 674 points, I think, off the highs. And,
so you're off.
And what I said, here's what I said, though. I said this one could be bigger and kind of uglier and longer lasting than the last one, too. So 700 points doesn't have to be the bottom of it. That's sort of what I felt like was for sure coming. So, I am too. Here's the problem. So you guys fire whatever you want at me, but just in brief, I mean, Amazon hasn't come down, Netflix hasn't come down. So the two most crazily, egregiously overvalued FANGs are the ones that haven't been hit. So the funniest thing is, Facebook is the second cheapest FANG, and it's taken the biggest hit. Google's actually been hit pretty good. So the two FANGs I would say are, they're not stores of value, but they're
the value FANGs.
Yeah, they're put it this way. I would have thought they would be less vulnerable to a similar magnitude downside move as Amazon and Netflix. So in other words, whatever is going to happen to Facebook is going to happen to Amazon and Netflix times 1.5 or 2 or 3 before this is all done, I think.
All right. Go ahead.
Let's jump to the Twitter train. Take a minute, Twitter, Joel.
Okay. So disclosure, both Sean and I are long-term holders of Twitter on the long side. And over 36, man, it looked really juicy up there. Look at going to 40, 45. And then you get Andrew left there. You get Citron, and I don't know if he looks at the charts and says, "Man, if they could take out that double bottom at 29.70," or
maybe he does.
What he was looking at here definitely exerted some influence. I'm prepared. My plan after earnings here, if we want some long-term strategies, was to wait for this to come back down and fill the gap at the $27 area. I didn't want to sell it and rebuy it in case it kept going. So he was on CNBC. He's made his thesis. You were fuming. You have a different view of things. So walk us through what Mr. Left was basing his bearish trade on.
Well, excuse me. I wasn't fuming. I would like CNBC to come on because I can refute the fallacy of the argument in 3 seconds. So here's the problem. So by the way, I don't really want to talk a lot about what he said because applying logic to an illogical argument doesn't work, right? So, but the central thing he said was their data licensing business is 100% margin business. Well, that's just factually incorrect. Now, I can't tell you guys what the data licensing business is, the margins are, because I don't have Twitter's cost center, division center financials, which you'd have to have, right? But I work for a fintech company, and I can guarantee you the data licensing business has overhead. They have salaries. They have people that work for it. They have computing power they spend money on. They have salespeople, blah, blah, blah. I could go on. The point is, the data licensing business probably has similar margins to the rest of Twitter. It might have slightly higher margins because maybe it's leaner. Maybe some of the people that work at Twitter, share their skills and add some power to the data licensing business or something. The bottom line, though, is that there's no way that division has zero overhead and 100% profit. And he basically said it's 100% margin business. So, was it
Sean,
yesterday?
Sean,
anyway?
he also said that they sell, direct messages, which factually is not true.
Well, yeah. So Twitter refuted that, and the stock didn't really bounce anyway, right? I mean, this is one of those things. Sometimes stocks just have an engineered takedown, and the engineering, I don't think it's like people get on the phone and plan it to happen. Like, I don't think Andrew Leff got on the phone with the 3 biggest algorithmic traders and the guys who are still bearish on Wall Street and said, hey, let me float a note and we'll take Twitter down 12%. But it ends up kind of happening that way. Because what happens, the retail guys who have stops, they all get their stops run. The institutional guys who have stops all get their stops run. There was probably a ton of late buying. In other words, there's probably way more volume in Twitter above 30 to 32 to 34. So put it this way, anything above the post-earnings gap, there was probably way more volume at those prices than there were pre-earnings, in the low to mid 20s. So it was, I think if Andrew Leff did anything smart, is he probably sniffed out that there was maybe greater weakness in Twitter than maybe some other names. So here's where I come across on this whole thing. So sometimes Wall Street, well, not sometimes, lots of times, things move actually the exact opposite of what they should move. And my contention is, and again, I could be proved wrong, but I'm pretty sure I'm going to be proved right. My contention is Facebook's actually losing revenues and Twitter's picking some of it up. So there's no question. We've seen proof that companies are pulling advertising from Facebook. Those advertising dollars are going to go somewhere. My guess is they're largely going to go to Google and Twitter. Some of them may even go to Snap, by the way. But those dollars aren't going to disappear from the internet/social media ad budgets. They're going to find a different place to go. So in fact, I have a new model for Twitter. I actually think Twitter is going to pick up minimum 200 million annual revenues from this Facebook issue. They could pick up as much as 450 to 600 million. But I think 200 million is minimum for an annual revenue bump from this issue. So we'll see what happens. Now, we're not going to see that. We're almost at the end of the March quarter, so none of that's going to show up now. But you might see some of that show up in the next quarter. And then the last thing I'll say on this is, how many times have we seen the poor retail guys get in late, get scrubbed out right before the next major catalyst hire? I saw it on Micron numerous times. I've seen it on Google and Apple numerous times. But I suspect the next quarter is probably going to be as good, if not better, than the quarter that propelled Twitter stock higher. And so wouldn't it be ironic if the poor retail guys who finally felt good and bought Twitter at 33 or 34 or 35 get stopped out before the stock moves to the next leg higher?
Sean, so what do you do here now? So we look at Twitter, 10 trading days ago was trading 35. Now it's trading 28. So the stock has lost, 7 points from, and you're the retail guy. Do you buy here? Do you hold? What's the call here at $28 on Twitter? Because I don't see much support until 25. When I'm looking at the chart, I don't see much in here really till 25. I like it at 25, as a technical trade, because I think there's some major support there. Do you think we can get to 25, with a little bit more, retail carnage here? Or do you think you got to strike early and we're not going to get there?
Yeah, maybe you do things in thirds or quarters. I think you can take a little here. Full disclosure, I did buy some yesterday.
Okay, so you're a buyer here.
Yeah, but very small. So here's exactly how I do this trade. So assume I didn't even buy any yesterday, right? But whether I did or not, it's really immaterial because I did catch it pretty good. But what I prefer to do is I really don't try to get the low. I prefer to wait. And so show me the curl. So by the curl, I mean, I like to see the curl on the bottom of a chart, whatever time frame, a 5-minute chart, a 3-minute chart, a 15-minute chart. I want to see some support coming in, some buying coming in. And I'm, even if I miss a full buck or something on a quick trade, I don't really care. But I'm kind of more of the type. So I kind of agree with you. It could go to 25 because put it this way, should it even have gone below 30? Again, they're picking up business from Facebook. There's a very good reason that had the NASDAQ not dropped almost 700 points, that Twitter probably would have gone up while Facebook went down. So we'll see what happens. But yeah, I sometimes I'll nibble. Sometimes I do like what I call these micro knife catch trades. But usually I wait for a curl. So, and then if you guys want, hey, for your listeners, I put a 5 EMA or a 10 EMA on a short chart. So like an intraday chart, put a 5 EMA. And if you can get Twitter back above a 5 EMA or a 10 EMA on a 5-minute, 10-minute, 15-minute chart, and then just watch that and see if you get a curl, see if you get that early turn. That's where I tend to try to toe dip a little more. But yeah, my plan would be, because I sold some of this off. My plan would be I'd like to replace all the shares I sold, 6, 7, 8, 9 points lower. That's fine with me. But I do plan on getting back to a full position in Twitter before they report. That's how I'm going to tactically trade it from both a short and a long-term methodology.
Just quick note here. We are almost 10 points off that pre-market high. We went to 26.27. We are now only higher by 2.5 points on the session. So
we gave you 7 points so far.
Dennis,
since we started the show.
You did. I was too busy. I looking at stuff. I wasn't executing. Great call so far. Boy, if it goes red here, I might have to get the scalpel out. Shopify. Shopify. Is that something you follow? That got Nope, you don't follow Shopify.
No, other than I think it's a really good short. I didn't short it. Things I shorted Micron, I shorted Western Digital, shorted some other names.
Let's talk Micron.
Shopify is probably one of the, oh, go ahead.
Let's talk Micron, because Dennis is he's going hook, line, and sinker on this PE and stuff here. I missed it.
I'm saying I'm backing up the truck at $50, Sean. I don't know what your call is here, but I like it at 50.
Well, it's due for a bounce. So for a bounce trade and for a short-term bounce trade, in fact, you never know. I might buy it around there too. I was kind of lining up sort of 47.50 to 50 for a short-term bounce trade. Oh. So, but here's the problem on Micron. It's like everybody now says the stock's so cheap. Well, when I was buying it, the stock actually was really cheap, and it's 5 times more expensive now. So this is, again, cyclical companies in tech or any other sector they look super cheap at peak earnings. They look they look terrible when they have negative earnings. But yet when a cyclical company has negative earnings or very low earnings, is typically at the trough of the earnings cycle, and that's when the stock is actually cheap. So by the way, I use revenue metrics and EBITDA metrics and cash flow metrics. PEs are just bad to use for tech in general.
Yeah. So what are your thoughts here on Micron? You don't think it's cheap anymore?
Well, no. I mean, I actually think we're getting close to or closer to peak earnings. So this is very similar to, now here's the rub. This is a much better company than it was a decade ago. The industry is a much better industry. So there's not near the overcapacity that there used to be. There used to be a lot of price dumping and stuff. It doesn't happen much anymore because a small number of players control pretty much all the manufacturing of these memory components. So, but I think it's going to be a tough long until you get closer to the next iPhone cycle, because I really do think they're pretty much at peak earnings. So at a minimum, the rate of growth for Micron is going to start decelerating. It could go higher. There's some $100 targets.
There's $300 targets on the street here now. Are these guys just out to lunch? Is $100 not possible here? Thoughts there?
So when I know stuff, I tell you guys. I don't really know. What I do know is it's hard for me to be as bullish in a stock when it's 5 times higher than a winner.
But you were buying it at at $10. You were
$10.
And sure, Sean. But that's hindsight's 20/20 for the rest of us here, because you got to look at it as a point in time now. $10 off the table is not going back to $10.
Yeah, but
we're looking at it as analyzing it today, because not all of us were lucky enough to buy it at $10.
Oh no. So what I would say is, can't you find anything else to buy? That's where I would be. If you can't find anything else,
stocks? That's a great segue. What are those stocks? Are those other tech stocks that you would like better than Micron?
Yeah, so something like another name, which I do think is an emerging uptrend. We've talked about this before. FireEye's pretty easy call here. There again, that's a name that I almost think should be benefiting from the Facebook In fact, I almost think the whole cybersecurity sector should be benefiting from sort of the Facebook carnage. Yet it hasn't really, just because I think the group has basically succumbed to tech weakness and NASDAQ weakness. But if anybody's going to kind of pick up business from these issues, it could be security names. So that's good. But in the chip sector specifically, the stock I just absolutely love. It's my favorite large cap name. In fact, I feel exactly the same on Qualcomm as I did on Micron when Micron was cheap. And by the way, it didn't have to be 10. You know, I was buying Micron anywhere from 10 to like 20, but that was the zone. That was like with the go zone. So I think the go zone for Qualcomm sort of similar is, you know, anything 45 to 60 is sort of similar to anything Micron 10 to 20. It's so exceedingly cheap. It's so exceedingly cheap on cash flow. Hey, I mean, Avago was smart to try to buy them. That would have been
what about Broadcom? Are they cheap too? Because there was speculation 2 weeks ago that somebody might buy them, like Intel might actually buy them. The stock went to 270. Those rumors are obviously off the table.
I think that's loony town. I think that's absolute loony town.
Yep.
So no, in fact, you know, a good pair trade long term would be short Broadcom, Avago, long Qualcomm. But I vastly prefer Qualcomm. Another stock I really like in semi is Syna, SYNA. This is Synaptics. They're in a very similar situation. I believe they're through the trough of their earnings cycle. The charts actually acted a lot better too. They posted a pretty good report last quarter, and they're almost 10% below recent highs. So again, you know, nothing's safe when the NASDAQ drops 700 points quick. But that's a really, really interesting company now. They've done some smart M&A. I think they're on an upcycle. In fact, really the last 2 quarters have been better. So they likely troughed 2 quarters ago. So so that's what I would say. Like, well, now can those stocks bounce though as much if Micron could have a violent bounce? So I would chalk Micron up if you want to go long. Hey, put the thing on intraday charts, and if you catch a long setup, I mean, all you guys know, you have your ways that you like to trade longs, right? You see something in the technicals and you fire. So fire at it. But I think from a tactical sort of swing trading to long-term investment standpoint, I think Qualcomm and Syna have magnitudes more upside.
Okay, Sean, real quick, man, we could keep you on forever here. Just, you know, general market thoughts here. Someone's looking at NGG kind of utilities, interest rates kind of thing. Dennis and I were discussing on the pre-market show. We think rates are going up, and maybe not as high as everyone thinks. Just give us your general take on the market, interest rate, you know, tizzy, everything that's going on right now. Are you looking at those kind of value investments as well?
No, I'm not looking at utilities, but you know, I don't know if we're going to talk about GE. GE sells to a lot of utilities, so and it's a relatively higher dividend paying stock, assuming that they, you know, don't cut the dividend anymore. But you know, so something like that, I think might have some merit. In fact, if you could find some high dividend yielding stocks that have gone down quite a bit. Things I always look at are the oil MLPs.
Okay.
And things like what's the other group? You know, things like the AT&T and Verizon. You know, these guys that have these perennial 4.5% to 6% yield names. You know, sometimes they get hit when interest rates go up a lot. Yet it doesn't really affect those companies.
All right, Sean,
I think that might not be a bad trade. Higher interest dividend paying stocks.
All right, sorry, that was a big question there, and we're running up against the clock. Sean Udall, CIO of Quantum Trading Strategies, always giving us a good outlook on the market. Sean, we're going to get you back on again soon. Thank you very much.
Okay, well, before I go, where do we bottom? You guys tell me where's
this
the low
is. We got a
here?
bear and a bull going. I mean. Dennis is like a bear in a china shop here.
And I'm still
90% invested.
Yeah.
So how bearish am I?
I don't know.
Yes,
but Sean, I wear 2 hats. I wear a day trading hat and an investing hat. And the investing, I'm starting to nibble here. The day trading hat here says that we got more work to do on the downside. So, you know, as a day trader here, I don't like a lot of these, you know, setups, especially, you know, with a little rally here this morning that we had at one time. I thought the rally was going to fade here, and it obviously has. We're down 9 points from when I originally said that. So I just think we're going red today. But as a long-term investor, which is going to be a nice segue here because we're going to talk long-term investing for a minute, I think, there is some opportunity here.
Sean, I'll give you another.
I'm with you 100%. I'm still, again, but nothing says NASDAQ can't drop 1,000 points before this is all done.
2,600. A bunch of lows in the SPOOs, 86, 91, 96. Pre-market low is 2,600. If that goes today, I will be in Dennis's camp here. Really leaking now. We just went unchanged. All right, Sean, we gotta let you go here and finish up.
Thanks, guys.
Okay. All right. Let's get carried away with Sean there. 856. The SPOOs have come down. We are now 11 points off that pre-market high. Our traders out there, Soho 196, FCC out there hitting the market. Dennis, what are you seeing out there?
I'm trying to hit the market too. I'm missing bids here because I'm on the radio show still. So, but it's not pretty here. I mean, we've given back the entire gains that we were talking about here, giving back, and I think we're going red. We're obviously have given back almost 10 handles 12. Since I started talking about that. It looks like that's where we're going. We're going red. So, here's the cues. They just went red here. So Apple, we lost the leaders. I mean, this is what we do as Dave. This is why, I'm fairly consistent because I read the tells. And, by fairly consistent, I would say over my long-term career, I probably make money day trading 4 out of 5 days. Like I said, I haven't had a losing month day trading in 19 years. So you've got some consistency in your strategy. How do I do that? Is I read the tea leaves. I'm reading the tells. We lost some leaders here. So I mean, Tesla, we never got back because of the negative report. It's now down $10 and getting carnaged again. But we had Apple. We had a negative report from Goldman on it saying iPhone sales were lower. Apple was trading lower here this morning. And, we had a number of other techs that were looking like they wanted to roll over. We're losing the chips. I mean, NVIDIA was 228 when we started talking this morning. I said I'd be fading that rally. Where here we are, not even an hour later, it's 224. So it was kind of a tell this morning. There's nice setups. That was just a nice setup this morning to fade that rally. I mean, now you're at a point where now you're 10 handles less than, where I was selling it, 10 points ago. So, I still think we got more work to do. The Qs are now fully in the red here now. So I think there's more work to do on the downside. I was selling Applied Materials this morning. I was selling AMD here. AMD just went red here as well. I was selling all the chips that were trading higher here this morning. And, now I'm making a little bit of money because of that. I'm obviously trying to do the radio show at the same time, which makes it tricky. But we still haven't got to the investing stuff here. I'm just going to say quickly, we'll do it for 2 minutes and maybe we'll do another segment on tomorrow. Apologize to I believe it was Scott in my Twitter who wanted to talk a little more long-term investing, and we said we were going to do it. We really never got to it. So I'm just going to say here, and I've got to start canceling orders because we are this is what I do when I'm in trouble here and I start getting hit on bids. I cancel all my orders. So I had stuff sitting out there to buy when we came flat. Now we're going below flat on the NASDAQ. I'll just say long-term investing, there's a couple sectors that I'm starting to get interested in and sniffing in here right now. One is the food stocks. They showed a nice bid yesterday. Some of them are showing, some strength here today. Yes, GIS is trading down to $44 because that's where the offering price is. Yes, it's down $1.21. But some of these stocks are just starting to get too cheap. Kraft Heinz, it's going to test 60 here again today. It had an okay handle going. Procter & Gamble's been on my buy list. I've been talking about that for a while on the show. I haven't pulled the trigger yet because it hasn't given me an excuse to. Yesterday was the first nice candle on Procter & Gamble. So I'm interested in a pullback in PG here today in my long-term investment portfolio. Also, I've talked about Micron. I like it 47 to 50. Sean's, scaring me a little bit, saying, we know that earnings are cyclical. We've talked about that before too, but he's saying there's some better stuff out there. I already own Qualcomm. We know that. He likes that one long-term. I like it from a valuation perspective as well. Facebook is interesting, but there's just so many unknowns there. I can't pull the trigger on it. And then the utility stocks, they finally showed some life there yesterday. I think they start to get interesting here too, because, hey, let's be honest. If the market continues to show weakness here, Fed's not going to be raising rates as aggressively. So we have to consider that as a wild card too. And if rates aren't going up as aggressively, that is only good for some of these food stocks, some of these defensive names, some of these yield plays. AT&T and Verizon both catch upgrades here this morning from HSBC. They start to get interesting here as well. I mean, everybody was loving Verizon at 54. Jason Raznick coming on our show that day saying I'd be selling the hell out of that 54.5 when Verizon was trading right up at the highs. It's now 47. Now that starts to get more interesting. So there is, but if I'm looking at, what I'm at in my portfolio right now, it might be some of these defensive names. So some of these yield plays, because I don't think interest rates are going to go up, especially if we continue down in the markets. Interest rates Fed might not be as aggressive going forward.
Okay. All right. We are going to wrap things up here real quickly. That GE, if that rumor is not substantiated soon about Buffett getting involved, then I'd get the heck out of the way. Dennis, you just took the market down 16 handles personally. You are wrecking the market.
I was selling
your
some,
best call ever.
I wish I would have been selling more stuff there.
I'm not even.
It was a gift this morning. What a gift!
I'm not going to stay on today because
261.70.
Dennis is
15 handles we gave you here on the show, guys. We don't always get it right. We got it right.
You
today.
got it right there. Okay, Spencer, you want to wrap up things up and preview tomorrow's show?
Sure. That was our show for today, folks. Hope you enjoyed it. On tomorrow's show, we are joined by Mark Chaikin from Chaikin Analytics. He always makes good calls on our show, so he'll be on tomorrow at 8:15. If you want to catch any part of the show again or chat with Sean, we went nice and long with him. You can do that on our podcast, iTunes, SoundCloud, and Stitcher, or youtube.com/BenzingaTV to just rewatch the show as it aired. There. Thanks to all you who hopped into our chats today, premarket.benzinga.com and youtube.com/BenzingaTV. Appreciate you guys there. And those of you who listen to us later and tweet at us, we appreciate that as well. Joel, we're not doing ticker time today, correct?
No, there's still.
All right.
I just want to say one closing thought here.
Go.
Terry Curran making a great point again here. If this does get really ugly, and I think it could, if we went red, we just lost 15 handles. If it continues to get really ugly, the one thing I would be cautious or I would just say is, watch out for capitulation bottom. So if we just start washing everything out and they start selling stocks across the board here, just, keep an eye 10:30, 11 o'clock. If we lose, let's say we lose another 300-400 Dow points here early this morning, that could set up for a capitulation bottom.
All right.
So then you could get a bounce here around 10:30, 11 o'clock. So let's see what happens. Let's see how fast the selling is here this morning. But I think you got some nervous money managers here, and I would not be surprised these books are thin. So if we do get that selling here, that wave is selling off the hop, don't be surprised if we do catch a bounce 10:30, 11 o'clock.
Okay, Dennis, go get some honey there. And, it's such a bear. And, we'll see what happens.
Bearish today, bullish tomorrow.
Hey, great call. Great call.
That's the day trader life right there. You got to be able to flip it fast. So just be careful.
All right. Thanks a lot, guys. That'll be it. That's it for us today. See you tomorrow.